Is the market trying to bottom and setting up for that counter trend rally we've been looking for? That's coming up on today's edition of 3 Minutes on Markets and Money. Finally, some good news for the markets as they look to be trying to bottom here and set up for that bit of a counter trend rally that we've been talking about now for the last couple of weeks. Stock prices peaked back in March after that reflexive rally from the March lows following the Russian invasion of Ukraine. Since then, it's been very tough. We had the MACD sell signal here that has been just a very consistent downward trend, applying downward pressure to pricing at the same time. Yesterday, that rally that we had actually triggered that MACD buy signal for the first time since that March peak nearly 8 weeks ago. Markets have also been stabilizing here and forming a consistent level of bottoms that have been holding as support here really over the last 2 weeks. So it's been 2 weeks of a lot of volatility, markets kind of all flying around everywhere, but again, winding up. Even days that we broke that support level, markets would rally back at the end of the day to hold that level of support. Now, with that MACD buy signal in place, along with our money flow indicator turning positive, and again, markets still oversold here, not drastically back to overbought conditions yet, that suggests that we do have this potential for markets to make a bit of a lift here. That's going to be the big question, though, is how much room does the market have before we run into that next level of resistance? Unfortunately, there's not a tremendous amount of upside, so we're going to have to play this reflexive rally a bit more cautiously, particularly as we go into the month of June. So taking a look at different resistance levels, we can kind of pin out some ideas about where different targets will be for this rally. The first is the 20-day moving average, which is really the top of that downtrend line that we've been building since those March highs. Every time we rally back to that 20-day moving average, that has been the peak of the rally each time. Now, we're going to be at that level today if the markets rally a bit. So importantly, the markets will need to rally above that 20-day moving average, break above that downtrend line if we're going to get a bit more of a rally from here. The second level of resistance is going to come in right at the 50-day moving average. Now, this is a little bit better area here for the markets. If we can get above that downtrend line, as I was talking about a second ago, that's a break above 4,000 on the S&P. We then potentially get a rally back to that 4,200 level, that 50-day moving average on the S&P 500. Now, that's probably the limits of this particular rally as we move into the month of June. June, of course, the end of the quarter. We could see a good bit of portfolio rebalancing, pushing both stock prices and bond prices higher as a lot of mutual fund managers that run balance models have to rebalance. They're underweight both equities and bonds at this point. So again, that rebalancing process could certainly help lift us up towards 4,200. Now, if we do happen to get above that 50-day moving average, if we can build some momentum here in the markets, get some shorts to start covering, get a little bit better outlook maybe from the Federal Reserve, then the shot becomes the 200-day moving average, which is around 4,400. And that's going to put us back towards these previous peaks that we had back here in March. Now, that's going to be a very big rally for the market, certainly well within the confines of what the markets can do. But as we move to each one of these levels, I would be reducing risk because as we move further into the summer, there's going to be probably a retracement and at least at minimum a retest of these recent lows. There's a lot of trap longs in the markets. They're going to be using rallies to get out as well. So don't wait for the peak of the rally to try to get out. Use the rally to reduce risk slowly as the market rallies. And then once we get to the next cycle, peak, we can then start talking about hedging risk, rebalancing, shorting, whatever we need to do at that point. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you next time.